Right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good news stuff for you today. And the first and main story that we have today is that Japan penalizes crypto exchanges with Yakuza involvement confirmed, which is honestly not particularly surprising because wherever there's a lot of money, a whole bunch of people are going to go, both good and bad. So the Japanese regulator has issued business improvement orders to 6 of the country's 16 fully licensed crypto exchanges. And at least one of the 6 exchanges has some form of involvement with the Yakuza. So Japan right now is really big on the regulation of crypto exchanges because they suffer the second largest crypto hack of all time, not counting, or rather second only to Mt. Gox. So Japan's top financial regulator, the Financial Services Agency, has issued 6 new business improvement orders. The orders to Bitflyer, Tech Bureau, Bitpoint, Japan, BTC Box, Bitbank, and Quonin, or however you say that, follow the agency's first rejection of a crypto exchange registration on June 7th. So most of those nobody probably uses, to be totally honest, but they do provide a lot of volume, or rather, most of my viewers don't use those because they're all Japanese, but they do provide a lot of volume and liquidity for Bitcoin because Japan is pretty huge with crypto. So, Bitflyer, Japan's largest crypto exchange by volume, received an administrative penalty order. The agency said that after an inspection, an effective management system has not been established to ensure proper and reliable operation of the business, as well as countermeasures against money laundering and terrorist financing. The other 5 crypto exchanges received similar orders. Japan currently has 16 fully licensed exchanges. Previously, the only regulated exchanges to receive business improvement orders were the Tech Bureau, which operates Xife Exchange, and GMO Coin. So an interview with a news.bitcoin.com reporter, which I never really like reading news from bitcoin.com, only because it's a Bitcoin Cash shill website, and they often have to change their own ways just to prevent people from suing them because of how shady it is. But either way, sometimes the news is pretty okay. So a reporter in Tokyo, the FSA confirmed that at least one of the 6 crypto exchanges above was found to have some kind of involvement with organized crime groups, particularly the Yakuza. Without naming the guilty crypto exchanges, a spokesperson for the agency told a crowd of reporters, the FSA has found some companies do not have an updated database for screening the individuals who sign up. We strongly recommend those companies to remove all ties with anti-social forces or organized crime group, which I guess that's what they call organized crime in Japan, anti-social forces. I mean, are they really anti-social, or are they just kind of organized crime groups? Probably just stick with organized crime, Japan. It makes it sound worse, and it probably should sound worse because it's the Yakuza, you know. So as the crypto industry grows in Japan, the FSA pointed out the necessity for exchanges to work with the local authorities to create an increasingly secure environment with proper monitoring systems. So they're really big on regulation in Japan. Many exchanges just straight up get shut down if they don't comply to the fullest, which is okay because so many people have been losing a lot. And what was it? CoinCheck or something like that. I think it was the second biggest crypto. It's like 430 million or nearly $500 million or something like that in losses. So cryptos really need some kind, or rather exchanges really need some kind of regulation because currently they're just not doing a very good job. The amount of hacking that has been occurred in crypto is almost always focused on exchanges and or some kind of pump and dump on exchanges. So I'm glad to see some kind of regulation with exchanges because they really need to get it together. It seems like they're trying to save a lot of money by not doing the proper things, like just putting things in cold storage, or things that are just straight up inconvenient, like putting it in cold storage and only bringing it out once a day, or bringing it out many times a day. So just only keeping a little bit of crypto in their hot wallets, and whenever they need more, they have to bring it from their cold exchange, and that could take a lot of time and money to do that, but it's what they got to do to protect crypto and the individuals. So crypto markets' weak demand from miners hurt GPU producers. Oh no, not GPU producers. Now, so I really like GPUs, obviously, and mining with GPUs I feel is a more distributed way of mining rather than ASICs. But here's the thing, is that the crypto markets are weakening demand from miners, hurt GPU producers. Well, for a while there, GPU producers weren't even... they weren't even talking about crypto, and Nvidia was just basically shrugging it off as that, oh, we don't know how much sales is from crypto. And let me just tell you, it's probably a lot, at least 50% of your GPU sales, because if you go around to any stores, Fry's Electronics or Best Buy or even Amazon, Newegg, things like that online as well, there just aren't any GPUs to be found. Now there are, as now that the market has dipped quite a bit and the demand for it is so much lower, and the rate of return on income is much lower, or is much longer, the ROI. People aren't buying them as much, but that doesn't necessarily mean they're hurting from that. I mean, because their whole ideal was that, hey, we don't want to produce additional GPUs for crypto. We just want our gamers to be buying our GPUs. That's what we want to focus on. So gamers are still buying GPUs just like they always have been. So I'm not really sure I get this too much, and I don't have much sympathy that they didn't really recognize the crypto demand a long time ago. I mean, it's been going on for many, many years now, so where were you guys? So recent tech media reports suggest that leading video maker NVIDIA is experiencing excess inventory issues with the GPU channel. Uh-oh, time to lower prices. Oh, that's not good for us, oh no. The surplus is most likely the main reason for the delay in the launch of NVIDIA's new gaming card based on the Volta architecture, which was expected to replace Pascal generation. Well, there was a delay. Now there's a delay because there's a surplus, but there was a delay before because the sales were so high. What are you talking about, NVIDIA? You're all over the place. You know what I mean? So they basically weren't producing... They didn't produce a new generation card for 2 years, and they still haven't. So they were basically just reveling and drinking in their profits of how many people were buying their video cards for any price because of the crypto demand. But now that the crypto demand is down and their surplus is high, now they can't make the new generation card? What? Doesn't make any sense, NVIDIA. Come on, let's get with the program. So with crypto markets reaching to a number, so he said the company's not planning to release a new graphics processor in the near future. So now it's just not even in the near future. It was like in the summer, and now it's not in the near future because they have so many graphics cards. But before they didn't have any graphics cards, and they were talking about how they couldn't do it because all their sales were so high. What's happening, NVIDIA? I think you guys need some leadership. When with crypto markets reacting to a number of negative events in recent weeks, like the hacks of Korean exchanges CoinRail and BitThumb, regulatory actions in Japan, the exposure of scams and suspected market manipulations, a rumor of technical issue with the new consumer lineup have been replaced by another explanation. Inventory buildup. Oh, okay, so that's the new explanation. All right, that makes sense. Observers say it's probably due to overestimated demand in the gaming sector and underestimated impact of the declining demand in the market for mining equipment. Oh, you think? NVIDIA, seriously, you can hire me, $100,000 a year. That's easy as that, and I'll help you out with this because I've been saying this for many months now that you guys are just all over the place with what you're even thinking about doing. So, like, where are the new graphics cards? Are you even making them? Are you just storing them until the other ones sell? But when the other ones sell, you're making so much money that you don't want to release the new graphics cards. You see what I'm saying there? You guys got a loop going on. You guys got a loop, and it just keeps going around and around and around, and you're not releasing new stuff. It's gonna hurt you. These suspicions have been increased by rumors that a major Taiwanese OEM partner of NVIDIA, ASUS, MSI, or Gigabyte, have reported return 300,000 graphics cards to the company. People are returning them because they're not getting the ROI that they wanted, according to reports. And the giant has also been aggressively buying GDDR5 memory, which indicates an excessive stock of lower-end GPUs that need to be made into boards. Quoted sources from the industry claim the return of the chips is related to the decreasing demand from crypto miners. So NVIDIA has previously shared its expectations that the crypto fever would last until at least the end third quarter of 2018, but obviously GPU sales have already started to go down. Here's why, NVIDIA. Again, only $100,000, and I'll work for you. It's not a big deal, right? It's something you can afford. The reason why demand is going down for crypto miners, not only because the price of crypto is going down, okay, but one, that has a lot to do with ASICs and basically just taking away the profits from everybody, and then they're like, hey, these graphics cards aren't worth much anymore, and they're sending them back, okay? So that's not necessarily the fault of NVIDIA, yet here's what the fault of NVIDIA is. So you haven't released the new generation of graphics cards at a reasonable price, like MSRP of like $600 for the 1180, and maybe $700 or $800 for the 1180 Ti, or whatever you guys want to name it, because apparently you can't get right, and you can't even just say what the name of the new graphics card is. Because you haven't released that, the old graphics cards, the difficulty is way too high for them, and everybody's making $2, maybe $2.50 for a 1080 Ti, if that anymore, for something that costs $800. So instead of so if you would have released the new generation of graphics card, the 1180 Ti, or whatever you want to call it, again, I'm just calling it the 1180 Ti, we could see double the profits. It might be like $4, $5 per card, and people would be much more satisfied with that. That's a much more reasonable ROI than your current cards. So because you haven't released that is why you're getting this massive return on all your cards. Thank me later. That's a free one, $100,000, and you can have me permanently. So NVIDIA has previously shared its expectations that the crypto fever would last to the end of Corona. BTC is trading well below 7,000. Experts believe the downturn in demand for graphics cards largely due to the prices under this threshold. Of course, but without new graphics cards, without more powerful equipment, these miners all of us are receiving much, much less profit, and therefore we don't really care about your cards. So you're getting all these people that are buying thousands of dollars of your cards because of prices that were occurring 3 months ago. Then when they plug them in and realize that they're only getting $2 a day, per card or whatever, then they send them back to you, and you have this gigantic 300,000 returned graphics cards. So just make the new series, and everybody will buy them and will continue. But you need to keep up with it. Keep up with crypto. So that's all I have for this article. Again, all these articles will be in the description below, and you guys can check them out for yourself and read the majority of the article. But that's all I have to say about that, is because you're not releasing new graphics cards, because NVIDIA and AMD are just not on the ball with this. And for a while there, all of your graphics cards were completely sold out. That is a huge sign that you need to go to the next phase. When all of your graphics cards are so sold out that you can barely find them on Amazon for $1,300 a piece, when they really should be like $600, $700, that's a problem. That's a major problem, and that should have been derp. Maybe we should release a new series by now, and then everybody will be buying that, and everybody will be happy. But because you didn't do that, people are returning your cards. That's the reason why. EOS block producers have reportedly received an emergency order to refuse to process transactions for 27 accounts, according to a tweet posted yesterday. So EOS, they just get to stop whatever account they want. This has never happened before in crypto that I know of. Maybe on a couple occasions, but Bitcoin, all these major cryptos that we should be using, don't do that. They can't do that. So this is why we moved to crypto, so that people can't just freeze your accounts. Now, why are these frozen? Are they criminals? Are they, whatever? We don't know. So they didn't say why they froze them. But either way, it just shouldn't be frozen. It's just, crypto should be free for the people to use however you want. And if you're a criminal with it and the police catch up to you, well, that's your own problem. It shouldn't be the problem of the developers of the coin to freeze your account. That's not how it works. So Twitter user who tweeted the screenshot of the alleged EOS core arbitration forum wrote in the comments that he obtained the image from a private Telegram group, as his team is a block producer candidate. The unconfirmed screenshot of the ECAF order notes that the accounts are to be frozen pending further reviews and claims by an arbitrator, and the logic and reasoning for it will be posted at a later date. So it could be good reasoning, but is there ever good reasoning with crypto to stop your account? I don't know. I guess that's a debate for the future. But as of right now, that's really not the ideology of why most people got into crypto. So signed the order as the ECAF interim emergency arbitrator describes himself as a blockchain realist, and his LinkedIn is with his most recent job listed as a landscaper at Gardens from Here for the last 9 years. Neither the ECAF nor Sapoznik have responded to a request for confirmation from Cointelegraph by press time. So yeah, landscaper is a pretty good, should be, an emergency arbitrator. Not to say that a landscaper is not a good job. Of course we need landscapers, and it's a hard job. So anybody that's a landscaper watching this, I'm not ripping on you at all. It's a hard job, and it's a glorious job. But as an emergency arbitrator for a blockchain, all right, makes sense. Had come under fire from crypto Twitter earlier this week when they overridden an ECAF decision and froze 7 accounts associated with phishing scams. The ECAF later retroactively ordered the accounts frozen, but the publicized EOS BP conference call-based decision process has caused some question to EOS decentralized system. Oh, you think you guys are just now questioning the decentralization of it? Because what do you mean that it's decentralized? Everybody knows that it's centralized. There's really no argument about it. So again, that's all I have for this article as well. It doesn't really even go on much more. There isn't really much to it. Bitcoin advocate Charlie Shrem, who had tweeted about EOS account freezing earlier this week, retweeted the alleged screenshot yesterday. The logic and reasoning will be posted at a later date. GG, well played. EOS with a laughing, questioning the decentralization of the system. Are you guys just now questioning that? Wow, wow. So 3 reasons why this is not the funeral for Bitcoin. Again, I don't know. There's a funeral counter for Bitcoin. I think it's like at the thousands at this point. So there are 3 primary reasons why Bitcoin's current price action is not indicative of the first and foremost cryptocurrency's ultimate untimely death, according to popular trader Brian Kelly. This is not a funeral for Bitcoin whatsoever. The fast money analyst told viewers following the cryptocurrency market leader's most recent plunge, all of a sudden we're declaring that Bitcoin's funeral is here. Yeah, welcome to the show. Welcome to the show. That sentiment, Kelly argues, is a positive sign for an impending reversal of price action. He explained that when we start to declare a funeral and things get really horrible, the sentiment is approaching the lows, so hopefully we'll use that funeral FUD to say, you know what, that was near the lows. Okay? Thank you for that amazing quote. Kelly also notes the regulatory developments in Japan, arguably the most regulated country for cryptos in the world. Even though this is really after the gigantic hack, they really started going regulating it. It's a positive sign for Bitcoin's long-term growth. So it's actually a good thing. In the short run, it's going to be a little tough because they're stopping new accounts from coming in, but actually they're cleaning up the system. They're making sure it's more robust, making sure it's better for the people. I agree. These exchanges, they cannot be getting hacked like this. It's getting a little ridiculous. There's a way to not get hacked with crypto, and you take a little thumb drive, and you don't have it on the internet. Can't be hacked ever for any reason unless somebody broke in and stole it. That's a totally different story. Then you need like security guards or some kind of security or something. But there's just too much in the hot wallets. Like NiceHash lost 62 million, all in one wallet. All it took was the hackers to get in there and figure it out, and all in one wallet. And they're just like, oh, we'll just move all 62 million. Boop. And there's no reason for that. If I came in there as some kind of analyst or consultant, then I'm like, hey, you guys got 62 million in one wallet, and they're like, yeah, is that a problem? Yeah, that's a big problem. It's like putting $62 million in one safe that just somebody could strap to the back of a Dodge Caravan and then just drive down the street with it kicking and spewing around. That's not safe. You guys need to, even if you're paying people out multiple times. You're only doing it once a day. So all of your coins should not be even remotely connected to the internet. Take that plug, boom, just drop that plug. Get it out of there. There's so many other ways to do it. I think they're just trying to avoid that because, it's a lot of work. It really is. Cold storage and transferring and things like that does cost them a lot of money. But that's just not our problem. It really isn't our problem. And they're the ones making millions of dollars a year. Coinbase made $1 billion a year. They still haven't been hacked, to my knowledge. Maybe a while ago. I'm not sure. I don't think Coinbase has ever been hacked. But either way, these exchanges are making $1 billion a year or more, and there's just no reason for it at that point. Finally, Kelly notes that the latest news surrounding the infamous Mt. Gox Bitcoin whale is positive for anyone fearing a major dump. And then finally, there was news today that Mt. Gox is going into rehabilitation, and they're going to distribute the rest of the $1 billion worth of Bitcoin. But here's what's great about it: they're not going to distribute it until at least Q1 of 2019. So everybody thinks all of a sudden there's going to be a wave of selling. So now the wave of selling is going to be Q1 2019. So the prices can go up for now, and then the wave of selling can come later. Thanks, Mt. Gox. You guys are awesome. Cardano. So I love how, in case you guys don't know, it's Magic the Gathering online exchange. And then they were like, hey, we're a Magic the Gathering online exchange. You know what I bet we'd be really good at? Holding $1 billion worth of cryptocurrency. Let's just step right into it. Let's step right into it. We got this smart guy. We got this smart French guy on it. And we'll just step right into it. We went from Magic the Gathering trading cards to cryptocurrency, and we'll hold $1 billion, and everything will be just fine. And everybody around the round table and the CEOs and things like that, all in their suits, are like, yeah, no, this is a really good idea. This is a really good idea. We won't have anybody come in and help us out. It's fine. Thanks, Mt. Gox. You ruined everything. Cardano, co-founder of Wall Street, will bring tens of trillions of dollars to crypto. This seems a little positive, maybe a little too positive. Tens of trillions of dollars, because so far we got 257 billion. We don't even have 1 trillion yet, and we have not reached 1 trillion. I think we reached 800 billion. Actually, we could check. We could check what the market cap got up to. So let's check it out. Let's see, yeah. That's excluding. We want Bitcoin in there. No, we didn't get to 1 trillion. We got about to 813 billion or so. So not even close. And are they going to bring in that much money? Maybe eventually, but I don't think anytime soon. So Charles Hoskinson, it's a crazy name, co-founder of altcoin Cardano, tweeted June 2nd that the entry of Wall Street into the crypto sector will bring tens of trillions of dollars. Now we've been talking about the entry of Wall Street since last year. When are they going to come? Nobody knows, but if we just keep talking about how they're going to bring tens of trillions of dollars into it, everything's going to be okay. And you know what? If they bring in their tens of trillions of dollars, there's nothing bad that's going to happen. There's nothing bad that's going to happen. I know everybody's like, oh man, all the price is going to go up. That just means, and it's not like all these Wall Street people are going to own tens of trillions of dollars worth of crypto. It's just going to bring in that money. It's not like they're going to own all of it, and we're just going to be right back to where we started with Occupy Wall Street movement and watching people, poor people walk around the street screaming for equality, and then people standing in Wall Street drinking wine and laughing at them. I don't know if you guys have ever seen that video, but kind of makes you want to slap somebody in the face. Not to say that I'm like much of a socialist kind of guy that wants to spread all the money out like that. I kind of consider myself a Republican, but that whole movement was pretty disgusting, that nobody ever listened or anything, and that there were just people eating cake and drinking wine and champagne while watching everybody protest. Yeah. Wasn't a good look. But yeah, so they're just going to own tens of trillions of dollars. So, I mean, Wall Street's not just going to bring in the money. They're going to own tens of trillions of dollars. And you're going to own, whatever you got. And that's it. And then the price is going to go way up. You won't be able to buy anymore. Yay, crypto. So buy now. Trust me. Trust me on that. What's often missed by the cryptocurrency is going to die by broken record media is that after the next wave of regulation, Wall Street is showing up to the party with all their locked up capital. It's tens of trillions of dollars entering the space eventually. Future is bright. Was that sarcastic? Cardano, which is currently ranked 8th on CoinMarketCap, has a market cap of 3.5 bill. Charles Hoskinson was also one of the founding members of Ethereum, crypto startup Invictus Innovations, and crypto tech company IOHK. When asked by a commentator what exactly the crypto community is building, Hoskinson answered, an entirely new world. Okay, thanks for being vague, more corporate vagueness, but okay, an entirely new world. The intersection of cryptocurrency and Wall Street has been welcomed by those who also see potential influx in capital. In mid-May, cryptocurrency wallet and exchange Coinbase released a new suite of products designed to attract institutional investors by relieving security and regulatory compliance concerns. Speaking about the product release, the VP Coinbase referred to $10 billion of Wall Street money that now had the potential to enter the market. So the trillion value has been bandied around. That's weird. Around before, as Dan Moorhead, CEO of 1 billion crypto hedge fund Pantera Capital, said in April that a 40 trillion crypto market possible. Now it's 40 trillion. It used to be 20 trillion. Now it's 40 trillion. People are just throwing whatever out at this point. People are just throwing whatever out. Here's my prediction for Bitcoin. Here's MrSotko's prediction for Bitcoin. $127,000 in 2 weeks. Rely on it. Rely on it. Take out your mortgage and get a second mortgage and buy Bitcoin and rely on MrSotko's 127, just changed 102 million. Screw you. Coin market cap. We're at 257 billion, so we've gone just about nowhere. Still at 6,162 for Bitcoin. Still well under 100 for Litecoin at 82.60, and EOS falling even more by the day. So I'm so glad I sold this at like 14. I think it was 14. It was like maybe high 13s. I can't even remember anymore. I have to check Binance. But either way, I'm glad I sold that. Is it going to come up with Bitcoin? See, the thing is, though, is whenever you're talking about lowering prices going down, they're always going to come back up if Bitcoin comes back up. Because right now, everything is erroneously tied to Bitcoin, even though if Apple makes a bad move and goes down, it doesn't make Microsoft go down too. So there's a weird correlation with all cryptocurrencies and Bitcoin at the moment. And I think that should end as soon as possible, so that we can either let Bitcoin die, and yeah, I'm dead serious, or we can let Bitcoin fly and all the other ones die, or some other ones die. They need to be on their own, because right now, you know, whenever Bitcoin goes up, everything has these pairs. So if Bitcoin goes up, then Dokademic is paired with Bitcoin on some exchange, and then it goes up too. Is Dokademic a good coin? Probably not, but it's going to go up because Bitcoin's going up, and then people that are holding Dokademic get this false impression. They're like, hey, look, our coin's going up. People are buying it. Yeah, maybe. But, you know, it gives you a false impression to think like, hey, our coin's going up in value. That means it has good value. And that's not true in the crypto world. Just because your coin goes up doesn't mean, it just means maybe somebody poured a couple $1 million into Bitcoin, and that's why your coin went up. So we need to get rid of that. Those pairings as soon as we can. And even, you know, Tether, as much as everybody hates Tether and all the controversy behind it, these coins that tie the coin together, because a lot of exchanges can't use US dollar or euro to Bitcoin, so instead they use Tether, and that's okay. That's much better than pairing it with all of these other coins, because just because Bitcoin goes up, Zcash goes up. Now, I like Zcash. Zcash is a good coin, so that's probably a bad example. But all these coins will go up when Bitcoin goes up, and they all go down when Bitcoin goes down. Regardless if they're a good coin or they are a bad coin, they are going to follow Bitcoin. So it's really interesting how it works. Again, because just because some stock goes down in price because a company made a bad move, or they're not worth much, or they were a bubble, or they're overvalued, or whatever, and they go down, it doesn't mean that all stocks go down. And now there are slumps and times that all stock kind of goes up and down because there's more investors or less investors, but they're not necessarily correlated with each other at all times. But I hope you guys enjoyed this video, and as usual, I will see you guys next time.